Now let us continue with discussion on stocks. What we saw was yesterday was that uh, we saw about stock market where it's a place where you go and buy and sell the stock. So we said that there are two stock exchanges in India. One is called the Bombay Stock Exchange, the other is called the National Stock Exchange, okay? BSE and NSE. These are two places where you be in a position to buy or sell a stock. The other thing which we saw was that you will not be able to directly buy the stock from the stock market. You would need to go to a broker. So we said that there are different brokers who are there in the market, and each of those brokers will charge you a brokerage fee for you to be able to buy or sell a stock. We also said that because the stocks are being traded public, you have regulatory agency called SEBI, Security Exchange Board of India. They are the people who regulate the stock. Now, for you to be able to buy a stock, there are two things which you need to have. One is called a demat account. Now, what really happens was earlier on I said that the stocks were being kept or maintained physically. So there was a paper. The company gives you the paper. In that paper, the number of stock is written, and then the transaction happens. And then we move to electronic format, where we do not have physical transfer of paper between the buyer and the seller, because the stock has two elements. One is the buyer, the other is the seller. So you say that you want to buy, somebody says he wants to sell. The price is being matched by the stock exchange, and then the seller sells the stock and the buyer buys the stock, and whatever is the rate agreed at the exchange level, you pay, and the broker takes a brokerage fee. Now, what really happens was because the stocks are not physically maintained, what happens is there is something called a demat account. Demat account is also maintained by a central agency. It is like your bank account. Basically, it's like a bank account. In a bank account, you have only one element, which is your currencies or your what you call, money, which is there. In a case of the trading account, instead of money, you would have stock. So, which means that you go and buy 10 stock of, say, for example, Godrej Agrovita. Now, what happens? Somebody else sells the 10 stocks to you, and then 10 stock gets added into your demat account. That is the first thing. The second thing which you need for being able to buy or sell is called a trading account. So trading account is an account in which you have an agreement with a particular broker. There are various brokers out there. So what you have an agreement with the broker so that when you tell the broker buy a stock, he buys the stock, and once he buys it and once you pay the amount, that particular stock get credited into what is called a demat account. So everybody will have one demat account, but you can have multiple trading accounts. Please try to understand this. The demat agency is only one, but the broker agencies are many. You understand? You've got Religer, you've got SBI which runs its own stock trading. It's a broker. Then Indian Bank subsidiaries in Merchant Bank, which is the trader. So you can have your trading account with multiple companies, but your demat account will only be one. So demat account is a place where you hold your stock, and trading account is the account which you use for buying or selling a stock. So basically, to transact in or be a participant in this particular environment, you should have two things. One is a demat account, which is an account where your stock is being credited and kept, and the other is what is called your trading account. And the trading account, the brokerage, you will have to have an agreement with the broker, and the broker takes your all your details, which is their PAN card and the other details, which is there, and then they create a trading account. Now we said there are two what you call exchanges in India. One is the Bombay Stock Exchange, the other is the National Stock Exchange. Before, what used to happen is each broker would have an account and brokering right only with one company, which is either the NSE or BSE. But now, majority of the brokerage company has a agreement with both BSE and NSE, which means that you can buy or sell a stock either in National Stock Exchange or Bombay Stock Exchange. But the trading account is one. So, but your demat account is one. So you have a demat account. That demat account gets attached to a trading account, one or more trading account, and you use the trading account to trade your stock. And trading means either buying or selling a stock. The other element which I had not touched earlier, which I'm touching now, is basically when you buy or sell a stock, you become an investor. Why do you call yourself an investor? Because you are investing into that particular company. So basically, when you buy a stock into a particular company, then you become invested into that particular company. Now there are multiple kind of investors who are there, but predominantly there are there are three kinds of investors who you have to understand. One is a retail investor. So you and I are retail investors because we have a very small disposable amount of money using which we try to get into the stock market. And there are two more. One is called domestic institutional investors, DII, and the other is called FII, foreign institutional investors. Now, when you are buying a mutual fund, technically those people are called domestic institutional investors. So when you buy a mutual fund, you are not investing into one stock. They have a pool of stocks, and then they go about buying. They have their own strategy. They manage a very large fund, which would be 10,000 crores, 5,000 crores, and they have their own policies of where they will invest, on what proportion they will invest, all that they will do. So in the case of the mutual fund, they are domestic institutional investors. They are very large players, which means that they deal with a very large corpus of fund, and they similarly are foreign institutional investors who are people who sit abroad but who invest into Indian stock market. Why I'm telling you this is that you have to keep this in mind is the most important thing which you have to understand is the institutional investors' behavior is what determines the movement of the stock. You have to keep this in mind. You and I are buying 100,000, 10,000 stock. It doesn't really impact the movement of the stock. But when institutional investors buy or sell into a stock, it impacts it. So basically, you have to, for being safe, whenever you are buying a stock, you have to make sure whether institutional investors are there in that stock. The reasons are many. One is when institutional investors, because they deploy large amount of money, their ability to research into the company and the amount of information they will have in the company is much more than what data which you and I have. So we have to be sure whether institutional investors are there into that particular stock. So generally, one of the thumb rules for investing into a stock is to find out whether institutional investors are invested into the stock. If institutional investors are not invested into the stock, it is generally better that you avoid that kind of stock because it may not, there might be so many things which are there. This is a guideline. But as you mature in your investment journey, your strategies might change because there might be some heads up company coming your way which you will come to know. So the multiples might be much higher. So you might get invested into that company for your own benefit. So that is going to be different. So let's not get into that. So to sum it up, let us stop here. So what we have covered is stock exchange, how do you buy, what is a demat account, what is who is the broker, and who are the institutional investors. Let's stop here and then let us look at more details in the subsequent class.